Coinbase yesterday, Brian Armstrong came out last night after hours and said Coinbase has secured board approval to add $500 million of cryptocurrencies to its balance sheet. And moving forward, it will also invest 10% of its future quarterly profits into digital assets. They will become the first publicly traded company to hold Ethereum, proof of stake assets, DeFi tokens, and many other crypto assets as well, along with Bitcoin. So they already have some Bitcoin on the balance sheet. They went to the board, they got approval. $500 million is one of the bigger purchases we've seen. They are gonna buy some Bitcoin along with these other assets. And then moving forward, 10% of future quarterly profits, they will go ahead and they will invest into cryptocurrencies. The way they're going to determine which cryptocurrencies they buy is they are going to look at the aggregate custodial crypto balances. So when people come in and they put crypto in their custody service, they'll look at the percentages. If 50% is Bitcoin, 20% is Ethereum, 30% is everything else, they'll buy 50% Bitcoin, 20% Ethereum, 30% everything else. So when you start to think about this, there's two major moves here. One, $500 million of your balance sheet plus 10% of future profits. This is a model that I think more and more companies in the future in the public markets are going to pursue. You now have to have a Bitcoin and crypto strategy for your balance sheet. Bitcoin is kind of the entry into the industry. I think it is inevitable that other companies will put other assets on their balance sheet, but Bitcoin will always kind of be that first entry point. On top of that, when you start thinking about the commitment for a certain percentage of future profits, regardless of if somebody pays in Bitcoin or cryptocurrencies or they pay in US dollars, Coinbase will convert it into digital assets. And so what you're slowly seeing is you're seeing an inflection point where more and more companies are going to start to convert their electronic QSIP assets, things like the electronic dollar, into digital assets. It would be very fascinating to see how much of this is going to be stable coins along with Bitcoin, Ethereum, or others. Now, there are many other companies that hold Bitcoin only on their balance sheet. MicroStrategy, Tesla, Square, Marathon Digital, Coinbase, HUD 8 Mining, Galaxy Digital, etc. And Coinbase is a very big business. So over a $50 billion market cap, Q2 revenue was $2.2 billion. Net profit in Q2 was $1.6 billion, which was up almost 50 times from a year before. Some of their top clients include Elon Musk, SpaceX, Tesla, and 10 of the 100 largest hedge funds. Their Q2 trading volume was $462 billion. About 25% or so of that total trading volume was concentrated in Bitcoin. And so when you start to think about the future of a public company's balance sheet or the treasury management, no longer are companies going to be falling over themselves trying to buy bonds or other types of assets that have a negative real rate of return. They are having to figure out something else. They cannot allow their treasury to be eroded away from a purchasing power standpoint. Michael Saylor, the Giga Chad of all Bitcoiners, who has bought billions of dollars of Bitcoin for his business and hundreds of millions of dollars personally, came out last year. And when he did, he said, I am buying Bitcoin because I want to preserve the purchasing power of my balance sheet. Now, what Coinbase is doing that is a little bit different is they're not only doing Bitcoin exclusively, they're also the first to hold Ethereum and other types of assets. I can only imagine what the compliance, legal, and accounting conversations were like in order to get this approved. We have the CFO, a quote from Alicia Haas, who says, quote, we may increase our allocation over time as the crypto economy matures. We believe that in the future, more and more companies will hold crypto assets on their balance sheet. We hope by incorporating more crypto assets into our own corporate financial practices, we can take another step towards building a more open crypto economy. Now, again, what we expect is companies in this space, companies like Square, MicroStrategy, Coinbase, etc. Of course, they are going to have a propensity to be the first to do this. But all of a sudden, we are moving from a world where it was MicroStrategy who had the shot heard around the world and kind of a one-off situation to now this is becoming normalized. People were just like, of course that was going to happen. And so I think that when you look at something like Brian Armstrong's tweets yesterday, he said, we recently received board approval to purchase over $500 million of crypto on our balance sheet to add to our existing holdings. So this is not brand new. They already have some. And we'll be investing 10% of all profit going forward. I expect this percentage to keep growing over time as the crypto economy matures. Hopefully, we can operate more of our business in crypto. Today is still a mix. Now, what this ultimately is signaling to me is that Brian Armstrong is saying today their business is some US dollars, some electronic cash, some kind of legacy system, and some of the new world. Eventually, the holy grail for a business like Coinbase or another large crypto economy business is to be 100% into digital assets. Now, when you have a platform that supports so many different assets, it is natural for you not just to hold Bitcoin, right? There's a part of your business that is in these other assets. I think two pieces of this that become very fascinating. One, if a business is solely looking to protect purchasing power, they're solely looking for a treasury management system, I think that Bitcoin is still going to be the decision. That's going to be the point where people say, okay, do we want to essentially buy digital gold? Do we want to hold on to this and preserve our purchasing power? Bitcoin will be the solution. If a company says, actually, you know what? We need revenue generation. We need to be able to get some sort of return on our cash and do it in a low risk way, but not have to take the risk of holding what are negative real returning bonds. Then I think something like stablecoin yield generation becomes really interesting. They don't take the price risk of any digital asset, and instead they still have dollar exposure, but they're able to get higher rates of return, something like 5, 6, 7, 8, 9% some of these platforms are offering. And so when you start to think about a business that says, you know what, our cash management solution is no longer going to be buying bonds or holding other types of assets. Instead, we simply are going to convert electronic dollars into digital dollars, and then we are going to put them into interest-bearing accounts, and we're going to generate significant yield off of those assets. You can see a business that if they can generate 7, 8, 9% on their cash position, it could become a pretty material revenue source. Think of somebody like Apple or Berkshire Hathaway, who sit on billions and billions of dollars of cash. If they were to take a percentage of that and to start to earn very high rates of return, you could see one, not only a continued normalization of the industry with public companies, but also two, very quickly, if you put $50 billion into one of these accounts, you could start to generate hundreds of millions of dollars in annual income that previously was not there. It's absolutely fascinating. And so then if we go and we look at the companies that have already bought Bitcoin, it's clear that this is not going to reverse. This trend is only going to accelerate from here. So we've got MacroStrategy, which is a subsidiary of MicroStrategy, great naming by Michael, that holds today, let's see, their cost base is $2.7 billion. The today value is around $5 billion, and they hold over 100,000 Bitcoin. Tesla is next with about 43,000 Bitcoin. Their cost base is around 1.5 billion. Today, that value is over 2 billion, not including the piece that they sold. And then also Square, that's got about 8,000 Bitcoin sitting on the balance sheet. They paid about 220 million, and they're up right around about 50%, $380 million or so of value. And so what do we think? Is this obviously the future and every company is going to end up doing this? Or do we still have a long way to go to get more and more companies to put Bitcoin or other assets on their balance sheet from the crypto economy?
I mean, I think it starts with Coinbase, right? Like Brian Armstrong, the company was founded in June 2012. He's obviously had deep conviction in the digital asset space to found a company in 2012, right? Bitcoin was $5 at the time, right? So we're talking about almost a decade ago at this point. The ecosystem has clearly developed over time and gotten stronger. But I think right, like Coinbase is the type of company that you expected to kind of do it at IPO. I think a lot of people were surprised they held $200 million of Bitcoin when they IPO'd earlier this year. A lot of money, but for an exchange that's been around for 10 years and has been dealing in those products, I think people were surprised that they didn't have more. But if you look at all the companies that you just went through that have done it, so I just looked up previously, MicroStrategy has about $5 billion, right? You just said their stock's up 400% this year. Tesla has about $2 billion, their stock's up 70%. Square has $375 million, their stock's up 70%. The S&P is up 40% during that, or 30% this year. So they've significantly outperformed all of those, the broader market. And yeah, there's a bunch of it that goes into Tesla, Square, MicroStrategy. They're all good foundational companies from that standpoint. But Bitcoin has clearly become a way to outperform and earn more yield on your cash.
Bitcoin is good for business. Point blank.
That's basically
period.
what I'm trying to say.
Bitcoin's up over 300% over the last 12 months.
Yeah.
Over 300% in the last 12 months. If you start to think about every single business that put Bitcoin on their balance sheet, it is very obvious that it helped because it expanded that balance sheet. If you look at somebody like MicroStrategy, right? Over a year ago, they decided to convert 85% of their balance sheet, and now it's up more than 300%. Absolutely nuts. Now, most of these companies are not doing very high percentages. I do not think that we know Coinbase's balance sheet right now, how much of it is in Bitcoin versus other crypto assets versus US dollars. That would be very fascinating to know what the percentage breakdowns are. And then if you look at people like Tesla, it's kind of high single digits, and Square, I think, is kind of low single digits. I think it was like 2-3%. And so these still, for the most part, are companies that are not going all in. They're not protecting the entire balance sheet doing this or kind of putting their entire balance sheet in. Instead, what they're choosing to do is these kind of smaller percentages. I do think, though, that the crypto businesses, the Bitcoin miners that are public, all these types of businesses, they're the ones who are going to go first and be super extreme, obviously. Over time, though, Tesla's balance sheet, 50% in Bitcoin. There's two ways we get there. They keep buying more and more and more, or they essentially just bought, single digits, and Bitcoin appreciates so much that it grows to become 50%. If that happens, Elon Musk looks like a genius, right? Jack Dorsey looks like a genius. Michael Saylor already looks like a genius because his balance sheet has expanded, hundreds of percent in the 12-month period. Bitcoin is good for business. And I think that what we're watching here is just another company explicitly saying this is our strategy. And it feels like they're hitting the gas pedal a little bit, right? Because they're not just doing Bitcoin, they're doing the other assets. And also they're saying future profits, we're going to auto convert on a percentage basis.
To me, it's less about the $500 million purchase. And that's a very large purchase, especially for the amount of cash that they have in their balance sheet. But it's also about the 10% that they said they're going to continuously buy quarter by quarter, right? So,
well, I think what they're doing, right, is they're just doubling down on their business model, essentially, right? They bet on, their entire company was a leveraged bet on the play that digital assets were going to continue to grow in demand over time, right? They built an exchange that you could trade digital assets on. So the idea that they think digital assets will continue to expand and demand will continue to increase over time, that's obviously what they think, right? So when you put it on the balance sheet, you're expressing that you think the price will appreciate at the same time. I think the other thing that's interesting, though, is that this is a way for companies to get more institutional investments and people interested in their equity, right? So when you think about MicroStrategy and Tesla and Square, MicroStrategy, their investment base expanded for companies that were looking for exposure to digital assets and specifically Bitcoin that could not go out and just buy the asset themselves, right? So we've seen a bunch of companies. BlackRock just invested millions and millions of dollars in a couple mining facilities here in the United States, right? So that's getting exposure to the asset class without going and actually buying the asset itself. MicroStrategy has benefited from that. Tesla, Square, all these companies have benefited from that. Coinbase is basically just a leverage bet on that same play, a leverage play on that same bet.
Hey guys, thanks so much for watching that clip of the Best Business Show. Make sure you like and subscribe to the channel, turn on notifications so you know when we go live every weekday, and then head to SoFi.com/pomp so that you can get an account and we can get after it.